Good morning. Welcome to Stock Market Today. It's Tuesday, February 4th, 2020, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at Dan_Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where we get a lot of the content for this show, as well as give you daily stock ideas to consider. It hits your inbox every trading day before the market opens. So U.S. equities finished higher in Monday's trading. Materials and tech outperformed while energy and industrials lagged. Treasuries were mostly weaker with the curve flattening. The 3-month 10-yield spread actually inverted again. The dollar was stronger on the major crosses. Gold finished down 30 basis points and WTI crude was down 2.8%, falling for the 9th time in the past 10 sessions. As we get to the desk this morning, futures are up about 1.2% after equities rebounded on Monday. Asian markets were mostly higher overnight, led by China, South Korea, and Taiwan. European markets are moving higher as well. Treasuries are weaker across the curve. The dollar is stronger against the yen and the euro. Gold is down 50 basis points, and WTI crude is catching a little bit of a rebound, up 1.5% to get us going on a Tuesday. Taking a look at the structure here of the S&P 500, Monday's rally keeps the index in that support zone, right? We're trading in the support zone. The range that we've been highlighting between 3,200 and 3,250. Resistance, let's call it 3,300 to 3,330. And it looks like with the futures this morning, we're likely to trade up and out of this support range here this morning. RSI is holding bullish ranges for now, right? The pullback, right? This is what we've been talking about. A pullback into support where the RSI holds above 40. I mean, ideally above 50, but so far we've held above 40, right? So this looks like a normal pullback within the context of an uptrend with momentum still behind it. At the same time, Chaikin money flow is bullish. So the indicators still confirming the price trend. Price so far holding support and looking to break higher here this morning. And what's interesting is if we look at our overbought, oversold indicator on the index, the same ones that we look at when we look at individual stocks and ETFs, by our work, SPY is oversold as it holds this support zone. So potential opportunities out there to identify leading stocks in leading areas of the market that are also oversold. Market in a minute. What are we writing about in our note today? Well, equities stage a rebound to start the week. Materials and energy remain underperformers and bearish by our work. Both of those funds have bearish or very bearish Chaikin Power Gauge ETF ratings. The relative trend in healthcare is being tested. REITs fade, but utilities remain strong on a relative basis. And futures, as we said, do point to a higher open here today. Taking a look at some of the indices, the major indices from a power bar perspective. The Dow added 55 basis points yesterday, but the ratio turned bearish. 7 bearish or very bearish stocks for only 6 bullish or very bullish stocks. S&P 500 adds 75 basis points, and we saw a bit of an improvement here in the ratio, 105 to 97 bulls to bears. NASDAQ outperformer on the day doubled up the S&P's performance, up 1.5%, 32 to 8 bulls to bears, so a 4 to 1 bull to bear ratio there. Small caps also outperformed, up over 1%, 432 to 306 bulls to bears. Bonds down tick. Materials were a big outperformer yesterday. A bit of a reprieve from recent weakness, up 2%, but that power bar ratio is still bearish for the materials. 9 bearish or very bearish stocks for only 2 bullish or very bullish stocks based on our ratings for the holdings within XLB. So according to the Chaikin Power Bar, small cap stocks and large cap stocks are somewhat bullish. Major markets across the board are mixed with this bearish Dow ratio here. Let's hit our stock of the day now. Auto-generated based on the Power Gauge rating. It's Axis Capital Holdings. Comes to us from the insurance group and closed at 64.80 yesterday, up 86 basis points. The Power Gauge rating rather is very bullish due to very positive expert activity, strong earnings performance, and strong price volume activity. Had a nice pop here following their earnings announcement last week. And what we're on the lookout for now is a potential personality change because we have this very bullish rating, but a stock that's still underperforming. But the intensity of that underperformance has been diminishing of late. So if we start to outperform, this is what's known as a personality change, right? The rating changes from neutral to very bullish. And then if the stock begins to outperform, it's had a bit of a personality change, as we like to coin that phrase. Moving towards an oversold position based on our overbought, oversold indicator with solidly bullish Chaikin money flow. Strong trend above a now rising long-term trend line. and a strong industry group for the insurance complex here. This looks like an interesting name to me to add to a watch list and monitor that relative strength. We really liked to look for those. We really like to look for those personality changes, and it's something that we monitor closely. So add AXS to a bullish watch list to here today, and keep an eye on that relative strength. There may be an opportunity in the near future for a stock that begins to outperform that's part of a leading industry group. Turning now to the sector tracker, the movement of the major sectors over the last 5 days, and what a difference a day makes, right? Yesterday, there was only one of the sectors that was positive over the previous 5 trading days. Today, we have 5 sectors that are positive. Discretionary's had a nice run of late. Technology, we'd love to see tech towards the top of that list as it is the largest weight in the S&P 500. Now, utilities have been strong, and we're going to take a look at that chart a little bit later in the show. Financials starting to come on a bit as materials. That big move yesterday caused a bit of a reprieve there, but it's hard for me to get excited about the materials group when it has a bearish Chaikin Power Gauge ETF rating. Staples, comms, and industrials are middle of the road. REITs fading from relative on a relative basis, and we're going to take a look at that in just a moment. Healthcare under some relative pressure of late. I would expect, as I've said, healthcare to be a volatile group leading into the election. And energy, the XLE this week, its ETF rating turned very bearish and just continues to be an underperformer. In fact, for those of you who read my note, we actually made the comment that it looks like the relative performance is actually accelerating to the downside. So continues to be an area of the market that we want to avoid. No real signs of a turnaround there yet on either an absolute or a relative basis. Now, our industry in focus is the Dow Jones REIT Services Group. Ticker symbol there is RWR, and it's underperformed the S&P 500 by close to 10.5% over the past 6 months. And the power bar ratio, which measures future potential, is weak. We have 20 bearish or very bearish stocks and 16 bullish or very bullish stocks. And it's currently ranked number 13 of the 21 subsectors that we track based on this ratio. It's moved up one slot over the past week. So some of the indicative names there with very bearish Chaikin Power Gauge ratings: National Storage, NSA, Acadia Realty, AKR, and Seritage Growth, SRG, all with very bearish ratings. So those are stocks, obviously, that you'd like to avoid or shy away from. And if we take a look at the structure of the fund, it's kind of an interesting dynamic at play here because it's had a nice run, and the long-term trend, for the most part, had been solid until recently. So it does have a bullish ETF power gauge rating, but as I said, the ratio is bearish, and the trend is now starting to become weak as it is fading and below the long-term trend line, which has shifted from rising to, let's call it flat, to slightly lower. What the key here, though, remember, it's a combination of the rating and relative strength, right? We might see stocks or funds with a bullish rating, but if they're not outperforming the market, right, we kind of want to shy away from them, and that's been the case for the REITs since early November, right? We went from being an outperformer to being an underperformer, and that remains the case. And we're actually starting to see an increase in the relative underperformance. Chaikin money flow has been mixed over the past few months, moving towards an oversold position. So REITs as a group, at best, I'd call them mixed. Bullish rating, but met with underperformance. So it's hard to get really excited about that group. Starting to roll over here, which is kind of interesting because as rates have moved lower, you would have expected the relative trend in REITs to have picked up, similar to what we saw in utilities, as we'll see a little bit later on. But that has not been the case. So within the bond proxies, a bit of a bifurcation, if you will. Taking a look at what's trending now. Yesterday's S&P 500 movers and shakers are gainers and losers. Gilead adds 5% on some talks that they have a possible treatment for the coronavirus. So investors like what they heard there. CTVA, nothing company specific yesterday. I did notice that they caught an upgrade on Friday, so that stock kind of following through, up a little over 4% yesterday. IPG Photonics, IPGP, is a bearish stock at Chaikin Analytics, but it was up 4% yesterday. A bit of a reprieve in the market, lifting a lot of the names there. Netflix Nothing company specific to drive that stock higher by 3.75%. Same goes for international flavors and foods, up 3.6%. Nothing company specific on the news front to drive trade in there. But again, a solid day in the market. On the loser side of the board, NLOC, 52-week low, down 39% yesterday. SYY, Cisco, reported earnings. Stock lower by 6.65% yesterday, and it did catch a downgrade today at Wells Fargo. So some pressure there. XEC, a bearish stock, part of the energy complex, down 5.74%, again, following crude oil lower. Same goes for Valero, VLO, down 4.8%. Further weakness in the energy space, further weakness in crude oil, and Marathon, MPC, down just slightly less than 4.5%. Those bottom three names, XEC, VLO, and MPC, all related to the weakness that we've seen in the energy complex of late. Let's hit the charts now. Utilities are strong and overbought, right? So look at the difference here between the utilities and the REITs. It's interesting because last year, both of these stocks closely tracked the movement in rates, right? As rates were moving lower, REITs and utilities were outperforming. And as rates started to back up, REITs and utilities began to lag. But now we're seeing a bifurcation in the bond proxies. Here's XLU. Solid breakout from this consolidation. Now we had resistance at $65, right? And the low in the pattern is, call it $61. So that's 4 points wide. Add 4 points to the $65 breakout level, and you get 69. We closed at 69.20 yesterday, above the 50-day moving average, above the 200-day moving average, and very overbought. Take a look at the RSI, right? So that tells us there's confirmation in the move. But given the fact that we've kind of hit the upside objective for now, and we're really overbought in the near term, it really wouldn't be surprising to me to see utilities maybe start to consolidate, maybe see a little profit taking there. But it's interesting to note XLU does have a very bullish Chaikin Power Gauge ETF rating. And if we look at the ratio, check out the power bar ratio, 12 bullish or very bullish stocks for 0 bearish or very bearish stocks. And here's that relative strength, right? For a big part of 2019, utilities were an outperformer as rates were moving lower. And then as rates started to back up, starting in the late summer, early fall, utilities started to underperform. Now we've had a breakout to start the new year and start getting into some resistance here on a relative basis to meet that overbought condition on an absolute basis. This kind of tells me, do I want to be paying attention to utilities? Yeah, I want to be paying attention to them. The very bullish rating, the power bar ratio, the solid relative strength. I want to pay attention to them. Do I necessarily want to chase them in the here and now? Probably not. I think you probably want to wait for maybe a consolidation, work off that overbought condition on the RSI before considering some ideas within the utility space. But you can take a look at the fund. There are 12 names with bullish or very bullish ratings to start to do some work on. Healthcare is under relative pressure, right? Here's XLV. The healthcare fund has a bullish rating, 17 bulls to 3 bears. But this near-term uptrend has come under pressure. We're still above the rising 200-day moving average. After becoming overbought for a few times over the past few months, we've now worked towards but did not reach an oversold condition based on the RSI. But check out the relative strength. Nice rally starting in the October timeframe, and then it hits its head on resistance. Can't break through on a relative basis and is now beginning to roll over. Right, still looks like a compelling group to me, but obviously think that there's opportunities for volatility here. It's a hot button group leading up to the election, and I would expect some volatility over the months ahead for the healthcare space. And then finally, let's look at semis. They're near and dear to my heart. SMH, bit of a pullback here to test the breakout level above the rising trend line, 200-day moving average. Notice the RSI for SMH holding for now within bullish ranges and still holding above the breakout level on a relative basis. So watching the semis closely here to get our cues for the market. That'll wrap us for today. If you're interested in trying out Chaikin Analytics, head over to chaikinanalytics.com/test drive, where you can sign up for a free 14-day trial and see a lot of the data points that I comment on each and every day in this show. Have a great Tuesday, everyone.